Recently, Adani Group has been making headlines for all the wrong reasons. Adani's growth in recent years has been very rapid. In this video, let's see if India can handle the consequences if Adani fails. Thank you, it's a pleasure to have you here at Digital Report channel. Adani Group is a diversified organization which operates in various sectors including ports, agribusiness, energy, defense, aerospace, real estate, financial services and more. It has a market cap of over 21 lakh crore rupees comprising 7 publicly traded companies. It's an open secret that the Adani's close relationship with Prime Minister Narendra Modi has fueled Adani Group's growth, which has sparked accusations of favoritism. Adani has secured numerous government contracts in energy and infrastructure with the help of Modi. Adani Enterprises, the main company in the group, has unveiled a follow-on public offer (FPO) aimed at raising 20,000 crore rupees for green hydrogen initiatives and debt repayment for its airport projects. However, this fundraising has been overshadowed by claims from American short seller firm Hindenburg Research that the Adani Group has been involved in stock manipulation and accounting fraud for many years. The value of most of Adani Group's publicly traded stocks has decreased by almost 20% after the short-selling company accused Adani of executing the largest corporate fraud in history. Adani's business empire has lost a stunning 5.5 lakh crore rupees in market value, despite a 413-page attempted rebuttal to the short sellers' fraud allegations that blasted them as an attack on India. Gautam Adani has slipped from the list of top 10 wealthiest people after these fraud allegations which wiped off millions of dollars of his fortune. Adani Group said this is not merely an unwarranted attack on any specific company but a calculated attack on India and the quality of Indian institutions and the growth story of India. In a sharp response to Adani's rebuttal, Hindenburg said the company had failed to address 62 out of 88 specific questions it had raised about its operations and internal governance. The short-selling firm also said, "We believe India is a vibrant democracy and an emerging superpower with an exciting future. We also believe India's future is being held back by the Adani Group, which has draped itself in the Indian flag while systematically looting the nation." Despite the expansion of Adani's companies, private investors have been cautious about investing in Adani stocks. However, the Modi government had no hesitation, particularly the 66-year-old life insurance corporation, LIC, which manages more than 41 lakh crore rupees in assets. Over the last 2 years, LIC's investments in 5 of the 7 listed Adani's group companies have increased to over 30,000 crore rupees. Following recent concerns, Life Insurance Corporation of India, LIC, in a statement said that its investment in Adani Group is less than 1% of total assets under management and there is zero impact for policyholders. And it still have a substantial gain of 25,000 crore rupees in Adani Group despite their shares getting beaten down. We all know that the bad loans are the biggest issue of Indian banks. India's overall bad loan ratio is one of the highest among comparable countries at 5.9% as of 2022. Global brokerage firms CLSA and Jefferies do not see a material risk to Indian banks due to their exposure to the Adani Group debt, which has doubled in the last 3 years. CLSA report said that Indian banking exposure is less than 40% of total group's debt. Within this, private banks' exposure is below 10% of total group debt, and most banks including ICICI and Axis have indicated that they have largely financed assets with strong cash flow, such as airports and ports. CLSA added that PSU banks do have material exposure, 30% of group debt, but this debt has not increased in the past 3 years. Most of the incremental funding to the group for new businesses and acquisitions have come via overseas sources. On similar lines, Jefferies said Indian banks' exposure to Adani Group is manageable. The widespread concern is the rapid growth of Adani's companies and the numerous sector acquisitions they have made, leading many to question if the group can effectively manage it all. Some companies such as Adani Green Energy are futuristic and require heavy capital expenditures. If these debt-driven ventures do not turn out as expected, it could have a domino effect on the entire Adani empire. Some of Adani's publicly traded firms, including Adani Green Energy, Adani Enterprises, and Adani Transmission, have experienced a share increase of over 25,000% in the last 5 years. There are also concerns about whether the valuations of some of the Adani's group companies are in the bubble territory as warned by Hindenburg Research. If one or more of Adani's companies experience a major default, it will have a severe impact not only on the stock markets but also on India's economy, given the extensive involvement of the firm in the nation's infrastructure. The taxpayer will also bear the consequences of their indirect exposure to the Adani Group through Life Insurance Corporation, LIC, and state-owned banks. A government bailout may minimize the harm, but it would also be funded by taxpayers' money. Please consider subscribing to our channel and liking it if you found this helpful.